Ladies and gentlemen, good day, and welcome to Q4 FY25 Indian Metals and Ferro Alloys Limited earnings conference call arranged by Veritas Reputation. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Aryan Rana from Veritas Reputation. Thank you, and over to you, sir.
Thank you, Muskan. Good afternoon, everyone. On behalf of Indian Metals and Ferro Alloys Limited, I extend a warm welcome to all participants joining us for today's earnings call. We appreciate your continued interest and support. This session aims to provide deeper insights into our performance for Q4 and the full fiscal year ended March 31st, 2025, as well as the strategic direction for the road ahead. Following the opening remarks by our management, we will open the floor for Q&A session and kindly keep your questions concise and relevant to allow broader participation. IMFA, India's leading fully integrated producer of ferro alloys, has demonstrated resilience in Q4 FY25 despite ongoing market challenges. The performance underscores the company's focus on operational excellence, disciplined execution, and long-term value creation. Our financial results and investor presentation are available on our website and have been filed with the stock exchange for your reference. Before we begin, I would like to remind you that some of the statements made in today's discussion may be forward-looking in nature. These are based on the company's current expectations and are subject to various risks and uncertainties that could cause actual outcomes to differ materially. Joining us today on today's call are, and I welcome Mr. Vijayananda Mohapatra, Full-Time Director and Chief Operating Officer, Mr. Sonak Gupta, Chief Financial Officer, Mr. Binoy Agarwala, Head Power Business Unit, Mr. Sandeep B. Nalde, Head Mines Business Unit, Mr. Suresh Prabhu, Head Ferro Alloys Business Unit, Mr. M. Venkatesh, Head Sales and Marketing, Ferro Alloys Business Unit. With that, I would now like to hand over the call to Mr. Sonak Gupta, our Financial Officer. Over to you, sir. Thank you.
Thank you, Aryan, and good afternoon, everyone. Thank you, everyone, for joining today's earnings call on Q4 FY25 financial result. In my first earnings call briefing to you all as CFO of IMFA, let me take you through the financial highlights for the fourth quarter and full year ended March 31st, 2025. At the macroeconomic level, Q4 FY25 experienced uncertainty on trade policy-related developments along with geopolitical situation, impacting several segments of commodity markets. Global ferrochrome market traversed through a phase of subdued global demand and weak pricing trend. Despite this, IMFA demonstrated resilience and marshaled its resources on cost optimization, operational efficiency improvement, and leveraged its fully integrated model. The standalone and consolidated financial results have been already uploaded in our website for your perusal. As you would have seen our results, despite headwinds, our focus on efficiencies and disciplined capital allocation allowed us to deliver a positive free cash flow, retain a healthy financial position. Some of the key business and strategic highlights of FY25 are Chromo raised crossed 7 lakh metric ton for the first time for IMFA. Our work has commenced on that 96,000 metric ton per annum greenfield ferrochrome expansion project in Kalinganagar. The orders and LOIs have been placed for civil and structural works, major furnace equipments, and power transformers. During the year, IMFA has signed a power purchase agreement and with JSW Green Energy Group to acquire hybrid renewable power of 70 megawatt contracted demand. Further, we have entered into another binding term sheet with Ampin Energy Utility, One Private Limited, to acquire hybrid renewable energy of 40 megawatt contracted demand. This will enhance energy security and will substantially reduce our carbon footprint. INFA has also received necessary statutory clearances for the 120 KLD ethanol project and has also placed all the major equipment orders. Boundary wall for the project has been also completed. Further, during the year, and especially in quarter 4, the Regional Director, Eastern Region, has approved the scheme of amalgamation of the merger of Utkal Coal Limited with INFA with an appointed date of 28 March 2025. Financial entries for merger as per Indians have been passed in the financial books of INFA in quarter 4 FY25. While the macroeconomic environment remains uncertain, early signs of recovery in pricing, particularly in April onwards, gives us confidence in a more stable FY26. Globally, the stainless steel production has grown by 7% in calendar year 2024, and capacity rationalizations in markets like South Africa is expected to rebalance the supply-demand dynamics. In FY26, we remain focused on cost optimization, operational efficiency, and executing on our growth initiatives and to deliver the value to our stakeholders. With that, I will now open the floor to any questions that you all may have.
Thank you very much. We will now begin the question and answer section. Anyone who wishes to ask a question may press star and 1 on the touchtone telephone. If you wish to remove yourself from question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we'll wait for a moment while the question queue assembles. The first question is from the line of Ashwa Patel from Molecule Ventures PMS. Please go ahead.
Thank you for the opportunity. Very good afternoon to the entire team. Sir, my first question is, what is our EBITDA cost per metric ton for for Q4 FY25?
So the EBITDA cost is 76,980 rupees for quarter 4 FY25.
Okay. And sir, what is our met coke cost for Q4, the same quarter?
So for the ferrochrome cost per metric ton, in it...
No, met coke.
Yeah, I am saying that per metric ton cost of ferrochrome, the met coke component in that is about 15,150 rupees.
Okay, so it is similar to that level. So why I'm asking is because met coke prices have been continuously falling very much. So I just wanted to understand and gauge when do we accrue the benefit of falling met coke prices. So if 15,000 per metric ton is the rate for Q4, how do you expect, what was the opening inventory for this financial year of met coke? So per metric ton value.
So I'll just put it to Suresh. Will you be able to give your inputs on that? Suresh? I think Suresh should have dropped out. So if you see, for this last year, our average met coke cost was 18,881. From there, this year we have come down to 15,543. But we usually keep a stock of about 3 months because the major portion is imported. So the flow down will take some more time. But we have already envisaged and seen a drop in the current year compared to last year's average.
Okay, so we should see further benefit in Q1 and Q2 of falling met coke prices.
Yeah. If we see that drop, we will definitely get some benefit.
Sure. And sir, our ore raising is now highest ever. We are close to 7 lakh range. So I just want to understand how the inventory of chrome ore has moved over here. over last, say, 2 years? For example, earlier we used to keep close to 2 lakhs ton of inventory versus what does it look like right now?
Yeah, so on that part, I will just request Sandeep, our mines BU head, to put insight on that.
Sure. So right now we are having about more than 4 months of inventory of ore at our plant site, both the plant sites. And also at mine about 2.5 months inventory is with us, ready to dispatch.
Okay. So earlier, what was this figure? Say a year back?
It was about in the plants about 3 months stock was there. At mines about 1 month stock was here.
Okay, so we have basically increased our inventory on books by close to 50%, right?
Yeah.
Okay, and sir, equipment order has been completed for Kalinganagar expansion, equipment ordering?
Yeah, so major equipment ordering has been done for Kalinganagar project. And the point is that we have planned to commission it mid of next year, the first furnace, somewhere in June 26. So that is on track. And though the earlier question you were having, the chrome ore, there is a 50% increase from last year. It's not 50%. There is around 20-25% increase from last year. Basically, we are building it up for the Kalinganagar project, because that will, the moment it gets commissioned, we will be requiring chrome ore. So as you know, we cannot immediately jack up our production at the time of commissioning. We have to build it up. So gradually we are building it up for the chrome ore production.
Got it, sir. And sir, regarding the recent Merafe shutdown, what we have been hearing, I guess close to 8 lakh metric ton has been brought down by Merafe in South Africa. So can you please throw some more light on the furnace closure in South Africa, how that has moved, and what other players like Glencore was also earlier reviewing their business situation, but not sure whether they have closed down also or not. So can you please throw some light?
I'll turn to Venkatesh, our sales and marketing head, to add his insights on that.
Right. So Merafe announcement, Merafe and Glencore are partners. So they are partners. So Merafe's announcement was due to the market conditions, so the reduction in production. But Glencore also has announced they will start looking at more chrome units. So what they mean by that is, because there are challenges in South Africa, electricity costs have gone up, and the challenges with regards to the ferrochrome market per se. So they have reduced the production on a temporary basis. And when they say chrome units, I believe they would be looking to, export maybe more of chrome ore out of South Africa.
Okay. But, so let me put it other way around. Given that China completely is dependent on the imported chrome ore, right now, as we speak, still we are at an advantage of, say, close to 20,000 metric ton per ton in terms of cost of production compared to China because of our captive ore.
I don't have the exact cost of China. Yes, we have an advantage of having a captive mines. China has totally to depend on South African ore, primarily South African ore. So definitely their cost of production as far as chrome ore goes would be higher. But as far as other raw material goes, they may have a slight advantage, more specifically to do with coke.
Okay. And sir, recently
Mr.
there was...
I'm sorry to interrupt. I just request you to follow back the queue, please.
Sure.
Yeah, thank you. The next question is from the line of Aditya Wellinger from Axis Securities. Please go ahead.
Yeah, thank you for the opportunity, sir. So my question is on a forward-looking guidance. Means what kind of ferrochrome production we trajectory, means what kind of trajectory we expect for FY26, and then once the 1 lakh ton Kalinganagar smelter starts, so what will be the ramp-up time for that? So for fiscal 27, how much we can expect from that new facility?
So I'll just pass this out. Suresh, you were there?
Yeah, I'm added just. See, in the first year, we are expected to start the production from the month of mid of the 2627. That is around July, we are going to produce. June, we are going to commission. So it will ramp up will happen. So, but in the financial year, it will be around 50 to 60,000 production will be there.
Okay, understood. And as you said, there is 12 months of inventory already of chrome ore now on the line there. So for 26, fiscal 26, the new ore raising will not be materially higher, right? Means given the inventory situation we have. Is that understanding right?
Yes. Connected with the new facilities, there will not be a problem.
Understood. And any capex guidance for FY26 and 27?
So on the capex part, as we have mentioned earlier, that almost 840 crores of our investment is in Kalinganagar project, which is scheduled. The first furnace is scheduled to get completed in June 26 and the second one in September 26. Besides that, we are also under project completion of 120 KLD ethanol project, which is about 150 crore, which is on course. And on the underground mines, which is overall in a 5-year tenure, it's about 1,000 crores we will be spending. But a part of it will also come in FY26. So overall, we expect in FY26 around 800 odd crores, 800 to 900 crores will be the outlay for all these three projects.
Understood. I have few more questions. I'll join back the queue.
Yeah.
Thank you. Ladies and gentlemen, in order to ensure that management is able to address questions from all the participants in the conference, please limit your question to 2 questions per participant. Do you have follow-up question? We request you to rejoin the queue. The next question is from the line of Supriya Shah from Kotak Associate. Please go ahead.
Hi, good afternoon. There is a decrease in EBITDA by 44%, when revenue has only decreased by 12% and cost has also decreased by 1,000 rupees per ton. So, reason for the decrease in EBITDA?
No, this EBITDA 44%, which period you are comparing?
From Q3 25.
No, Q3, our EBITDA cost was about 77,800 and now it is about 76,980. Almost is just about 800 odd rupees per metric ton reduction. So not significant. But for that, primarily the reduction is on the chrome ore raising cost to some extent and to some extent on the your coke cost.
And what were the Q4 specifics in terms of ore, coke and power?
So our power cost is 4 rupees 9 paisa variable cost, but I will on the power I will ask Vinay to just add his inputs on this.
Yeah, Sonak, you are correct. In Q4 FY25, the variable cost of power is 4.09, and compared to Q4 FY24, which is 28 paisa less than in this quarter Q4 FY25. It's mainly due to coal only. Coal prices come down due to transportation of coal by rail.
And for ore and coke?
So on the chrome ore part, Sandeep, can you put some insights on that or your views on this?
chrome ore cost in Q4 was a bit lower due to higher production in Q4. We have done more production than our budget.
Yeah. So chrome ore from Q3, there was a reduction in this because of the higher production and certain cost optimization initiatives that we have taken. So for that, overall the cost has gone down, and it was per ton of ferrochrome, it was about net basis, it was 17,400 rupees.
And what was the specific ore in terms of HCFE?
Specific ore you are talking now? Specific ore is around 2.35 levels. It varies based upon the grade what we are making. It is 2.32.
And what was the coke per ton price and specific coke per ton of HCFE?
The coke price in this quarter is around 31,000. Specific, you can consider it as 560 kg.
Thank you.
Thank you. The next question is from the line of Manan Bandhu from Walford PMS. Please go ahead.
Hello. Thank you for the opportunity. So there was a little bit of confusion. So I would just like to re-clarify the questions asked by the previous participant. So the cost of chrome ore per ton, I want to know, not per ton of ferrochrome, but 1 ton of chrome ore is how much cost?
It's about quarter 4 was 7,500. Primarily what Sandeep has given the reasons. Because of that, it is 7,500.
Okay. Okay. And we normally consume 2.5 tons, right?
Yeah. That's what they were saying, 2.35.
Yeah, 2.35 we have consumed in this quarter.
Okay, 2.35. But is that also generally 2.35 or more than that?
No, it varies depend upon the grade. So you can consider from 2.35 to 2.5.
Okay, okay, understood. And so the next question would be on the average ferrochrome price for like we have long-term contracts and we have spot contracts also, right? So for the long-term contracts, could you please give us what is your ferrochrome price for those long-term contracts, please?
Venkatesh.
Yeah, we don't very specifically, have anything regarding long-term contracts because most of the contracts are long-term. But what I can say is the average price realization for prime would be around 93,500.
Okay, because last quarter when I had asked, it was around 89,000 to 90,000 per ton, which is like almost 60% of your total sales is long-term contracts. Hence, I just asked. And also this changes every month or 3 month basis.
I just wanted to add that what you were saying, 89 to 90,000, it is the net realization. That is the total, whatever is the ferrochrome we sell, which this quarter is 87,000, 87,021. So there is a gap in the average realization.
Yes, it's correct. I understand. But the long-term prices which you have with POSCO and other people you have with, those prices would be 93,000, you said.
See, these are basically a bit of strategic pricing. What Venkatesh has said, that 93,000 is the overall long-term contract average. That's the prime cost we have. And on the totality basis, our average comes to, this quarter it has come to 87,021 rupees is the average realization. Net.
Correct. Okay. Okay, understood. Just one second, sir. And sir, current ferrochrome prices, because the average would be what? Because anyway, the quarter is almost ended. So what would be that?
See, on that net realization value that I said, and with the average for Forex, whatever is the dollar cost, it is about 76 cents. But as I mentioned, there we are seeing from April onwards some upstick in the price. But it was for the quarter, February, March was very low. So almost China was hovering around 75 cents. So our average is around 76 cents on the net basis.
Correct. I understood, sir. I just want to know for this quarter, Q1, because 2 months have ended. No, April bhi ho gaya, and even May is gone. So what would be the price as of this quarter is what I want to know.
So normally for forward-looking pricing, usually, as you know, that there is a certain restriction on the SEBI guidelines, so we have to stick to that. But the only thing I can say that we are seeing certain upsides in the overall market on the pricing side. And Venkatesh, what would be that percentage of upside around?
Yeah, what we are seeing the prices currently is around rupees 1 lakh per ton.
Okay.
On the prime basis.
Yeah, on the total price. This is I'm not talking of in terms of the realization. I mean, the total price, what we are seeing today is around 1 lakh rupees per ton.
Okay, understood. Thank you, sir.
Thank you. The next question is from the line of Devi Chani from Tata. Please go ahead.
Hi everyone. The status of the Sukinda underground plant.
Yeah. So Sandeep, you can give your insight on that.
Can you please repeat once?
So she's asking for the Sukinda underground mines update.
Yeah. So for Sukinda mines expansion plan, we have already given the major contracts, and all the works are in progress for the decline, for the ventilation shafts, and for the main shaft also. So that is in line as per our plan.
Okay. My second question is, what is the ratio of EPS and?
Pardon, we could not hear you. What is the ratio of?
Sir, I just want to ask what type of electrode paste do we use for production of HCFC?
See, it is all based upon the market requirements. So based on the market requirement, the grades changes.
So is it indigenous or do we export?
No, it is indigenous from our mines only.
Okay. Can I have a little bit of knowledge on what was the stripping ratio for quarter 4?
What would be the?
Again, you could not hear you once more. Can you please repeat?
What was the stripping ratio in quarter 4 in terms of mining?
Okay, Sandeep, you can add on this.
So for open cast, the stripping ratio is about 1:3.5.
With the CR/FE ratio, which was last told in the communication, is
No. You are asking the stripping ratio that I have told. Now you're talking about CR/FE ratio. That is different.
That is 3.2, right? Currently.
Suresh Babu can tell about that.
Yeah, CR/FE ratio also varies. It is moves from 2.5 to 3.5.
Okay. And so this all totally added up to this time also the ferrochrome grade went above 60, or was it the realization was low in the market, so it was below?
No. We make 60 only. Our grade will be 60 plus. So based on 60, the blending we will do accordingly.
Okay. Thank you.
Thank you. The next question is from the line of Madhur Chaturvedi from MAIQ Capital. Please go ahead.
Hi, sirs. Good evening, good afternoon. Thank you for taking the time, and congratulations on putting up a formidable result even in challenging macro environment. And congratulations on the ceremony for the installation of the Kalinganagar plant also yesterday. So just wanted to get some more, just to clarify what is the capex numbers, because in previous calls it was, 650 crores for the 1 lakh ferrochrome expansion. Now in this press release it was 900 crores. So just wanted to get a clarity on, if we can just do in terms of ferrochrome capacity, what would be the CapEx? For the mining capacity, what would be the CapEx? And just sort of the timeline of when that would be incurred. If we could just get that more granularly, I think that would be very helpful.
Yeah. So, as we had mentioned last quarter also, and this quarter, first of all, thank you for your good words on the performance of the company. And yes, yesterday we had the opening ceremony of our Kalinganagar project. So on the CapEx side, on the Kalinganagar project, the total amount that I said was at 840, and if you add up the capitalizable expenses that will be spent at the time of trial run, it will go up to somewhere around 900 crores. So that is the overall CapEx, which obviously will be spent out by next year, September, October, by the time when we go for the commissioning of both the furnaces. So June will be the first one, and September 26 will be the second one. So that is on your first question on the...
and this includes working capital, or this is purely CapEx?
This is purely CapEx. Working capital will be separate. So this is CapEx outlay. And on the mines outlay, we have a plan approximately 1,000 crores for increasing the capacity, but that will be spent out in about 5 to 6 years from now. So it will be spent majorly. It will be spent out in year-wise. In the initial 3 years, the major amount will come, and then it will taper down by FY31 end. By the time we reach the capacity of 1.2 million tons of racing.
Got it. Perfect. So I'm just in terms of the furnaces now that you mentioned it. So what is with our technology partner? What technology are we going with? Are we going with Premise? Are we going with another technology like Outokumpu? Or what is the technology we're targeting, and how would that efficiency of power and chrome ore be in the new plant versus the old plant? Will we still expect the power to be around 4,000 units per ton and the conversion to be around 2.35, or are we going with a newer technology where we can expect those numbers to be more efficient?
See,
so I'll request Suresh Babu to give more input.
Yeah.
Thank you.
Yeah. This is a closed furnace. Both furnaces will be closed furnace. So that smelting is an energy intensive, and the technology. So the off gases we are using for the power plant. So the specific power will be of the same range because of our material what we are using now.
Got it. Perfect, sir. Perfect. And so just one last question from my end. This is more about the mining. We are mining, are we managing to extract more than our 6 lakh metric ton capacity? Is that how we're able to sort of increase our chrome ore inventory in anticipation of the power coming online, just from an operational point of view? Just trying to understand that if we, given the chrome conversion, most of our mining capacity goes into our production. Just what you think will be the maximum inventory we'll be able to store in anticipation of the commissioning Q2 next year?
So inventory...
Yes, go ahead.
Okay. So inventory will be just like this, what is right now. We are having inventory. You're talking for the Q2 of this year?
So just that we mentioned that we are sort of stockpiling inventory in anticipation of the commissioning of the new production line. Just how much will be able to do that, given that most of our chrome does go into our ferrochrome production? So how much we'll be able to extract as a sort of buffer inventory so that we can start production at Kalinganagar once that line is ready?
So right now, just as I said before, we are having the inventory of more than 4 months at our both plant locations and about 2.5 months at mines. So that is...
And that is a number we'll be comfortable with, sir, going ahead into next year, or we can ramp that up?
Yes, obviously. It will be quite comfortable right now also it is. And we are increasing our production. So just like in the last FY, we have done 7,02,000. So this lakh we have the plan of 8.25. So we'll be keep on increasing the ore production from the mines.
Got it. Perfect, sir. Amazing, sir. I'll rejoin the queue, and thank you for your time, and congratulations.
Thank you.
Thank you. Ladies and gentlemen, we request you to Please limit a question to 2 questions per participant. If you have a follow-up question, we request you to rejoin the queue. The next question is from the line of Pranav Jain from Ageless Capital Finance. Please go ahead.
Hi, sir. Am I audible?
Yeah, Mr. Jain, you are audible.
Hi, sir. Congratulations on the opening ceremony for the new plant. I just had a few questions. I just want to understand the power requirement for the new plants and the details surrounding it. How much are we going to get? From where are we going to get? Could you dwell on it a little more?
So I will request Chief Operating Officer, Mr. Bijanan Mahapatra, to add on that.
So we'll go for this Kalinganagar project with the help of renewable energy, hybrid energy, that we have tied with JSW with 70 megawatt and with Ampin with 40 megawatt. So this will help for a new facility, and both are going to be commissioned in June 26. So it is matching to our...
Sorry.
Pardon?
I was saying the 70 megawatt and 40 megawatt, are these the total capacity or is this what we'll be requiring?
No. Our requirement for Kalinganagar, it is approximately 60 megawatt. Okay, but it is a hybrid. They will not give every time that 70 megawatt. So the power will be utilized in our existing operation area, Chudar and Thiruvallി, so that we will also get that obligation, renewable energy obligation. So that will help, and it will also help our CBAM factor.
Got it, sir. And so next, sir, as you can see, ferrochrome prices, they bottomed out in Jan, and now they are recovering, as said by the management as well. When can we expect the full benefit of these prices in our financials? And also, can you help me understand the lag in price realization?
So on the price relation part, I would say the lag period is about 1.5 to 2 months for us to get the benefit out of it. But on the future outlook, I will just request Venkat just to give an overall viewpoint on the ferrochrome market price.
Yeah, thank you. So the challenges continue to remain. There has been an improvement in prices, but challenges continue to remain. The challenges, like all of us know, in terms of tariffs and ongoing conflicts. But there are small signs of the market improving. When we talk of China, they've introduced small stimulus measures. They've reduced the reserve requirement ratio. The banks have reduced the reserve requirement ratio by 50 basis points. So they have let out, banks can lend up to 1 trillion RMB more. So that's like a small stimulus measure there. They've also, reduced the lending rates by 10 basis points. So these all will help in the domestic demand, or to shore up that domestic demand. What we have seen with regards to tariffs also, President Trump has kind of toned down a bit. So now, China and US have been talking, and there has been a tariff reduction, and the talks are continuing. We are also seeing now a direct conversation between Russia and Ukraine. So, after the war, there is a lot of rebuild which has to happen. So going ahead, these are small signs of, positivity. And if any of that clicks, then I'm sure the market is going to rebound.
Got it, sir. Just a last question on a technical side. So how much coal do we require per ton of ferrochrome, and at what cost do we acquire it?
So Binoy, will you be saying the whole part?
Yeah, it's a met coke.
Met coke. Sorry, myself. Yeah. So for making a ferrochrome, it is around 560 kg coke is required. Okay, and the cost is around 31,000.
Okay, sir. Okay. Thanks a lot, and all the best.
Thank you.
Thank you. The next question is from the line of Rajesh Agarwal from Money or. Please go ahead.
Hello. Sir, my question is there any further possibility of cost improving overall production cost?
So we are, as I mentioned in my initial note, that we are focused on improving our operational efficiencies as well as to get out more cost benefits in future. So that's a continuous process, but it is again to some extent also dependent upon how the input cost market moves around. So for us, the key one would be the met coke as well as coal, that's the power cost. So there is a dependency on the market, but operational efficiencies, it's a continuous process. We keep on having internal projects to maximize on the cost optimization.
What is the possibility? 1,000 rupees per ton, 2,000 rupees per ton over 2-3 years?
No, it is very difficult to predict that out currently because it's a continuous process. But as I said, if you see that this quarter 4, we are at 76,980 of EBITDA cost. We service 82,836 of last year. So it's a mixture of both drop in the input cost, market price, as well as your cost efficiencies initiatives that we have taken.
So my second question is the stainless steel market is very good in India, and simultaneously, Jindal Stainless was saying after the tariff, China has become little costlier, and India the export also will increase. So why, if the chrome is the main, ferrochrome is the major raw material for stainless steel, why the realization and the price has dropped, and why there's not possibility of improvement if the stainless steel industry grows up by 10%?
So Venkatesh, you will take the call, then I will just add on to that.
Okay. Stainless steel market is growing in India. There are two parts I'll answer it. While the market is growing, there is a weakness also in the demand of Indian stainless steel. Yes, Jindal is increasing, but there are other producers who are really struggling. And and that has to move or mostly moves in line of what happens internationally. It's not that India can do too well and others don't do well. It's almost on similar lines. So stainless steel market in India, yes, the growth is happening, but demand continues to be weak.
So, but if overall the market improves, stainless steel, including India and export, there's a possibility of further improvement in our realization of ferrochromes?
Yes, ferrochrome.
I'm talking about structurally. I'm not talking about quarter to quarter. I'm talking about structurally.
Yeah. So we are looking at two things here. Number one, when we look at the prices, they are almost, obviously they can't be same in all the markets. There would be a difference, but they are at similar levels in different markets. The second thing is going ahead, what we see, if you are talking of the structural, but going ahead, what we see, we would see a big jump happening in stainless steel production in India. So going ahead, for us also the domestic market will become a focus.
Okay. So realization is better in domestic or export?
Right now, both the markets are similar. Like I said, 1 lakh rupees a ton, it's similar in both the markets.
Both the markets, okay. Then if we, then will we enter into a long-term contract? No.
Sir, I'm
Hello?
sorry to interrupt. I just
Last question, ma'am. Last. Okay. Just last question. Sir, if we get a better rate in the spot prices, will we still sell in long-term contracts?
See, long-term contracts has the own benefits. When the word long-term means you don't look at one transaction or a month. You look at a horizon. So, and your material is assured to be sold. In a spot, you never know what happens.
Okay. That's right. Thank you. Okay. Thank you, sir. Thank you.
Thank you. The next question is from the line of Vinit Thakur from +91. Please go ahead.
Hi, sir. Good afternoon, sir. Congratulations on the new plant opening, plant work. I just had a question with the national steel policy of 300 million ton of FY 2030. what would be the ferrochrome demand going ahead? Would it be increasing or will it be neutral to it?
Suresh, if you can.
Venkatesh has something.
Yeah. If I can get your question right, that was pertaining to steel, which is carbon steel, not stainless steel. Our ferrochrome goes into the making of stainless steel. So the policy, what you said was of 300 million tons is of crude steel, carbon steel. Stainless steel is also going to grow. Like I said, I was speaking a little bit earlier, stainless steel is going to grow, and we are there at the right time with our expansions happening. So obviously, we would be catering more to the domestic market, like I said earlier.
And sir, could you give a guidance on what would be the production numbers for next year?
So usually we do not give more than 2 quarters, whatever is the guidance. So anyway, on the H1, Suresh, you can give your some guidance on what we expect on the production line.
The production is similar to what we have for the next half year. It will be around 130,000, 2 quarters.
Okay, sir. Thank you so much.
Yeah.
Thank you. The next question is from the line of Ashok Patel from Molecule Ventures. Please go ahead.
Hi, sir. Thank you for the opportunity. So my question is, I have been following the company for past many years. Earlier, we were guiding for a furnace capex of only 500 crores, but now we are guiding for 900 crores. So that is effectively 80% higher furnace capex. So what has changed?
So there are 2 furnaces in our Kalyan project. So whatever we were seeing 900 crores is of the 2 furnaces overall. But yes, with time the cost escalations will happen, and there will be a situation where we have to manage based on the whatever is the cost of it. But it is a 2 furnace, not a single furnace. That cost.
2 furnace, what capacity we are considering? Two furnace?
It is what we said is that 96,000 metric ton annual capacity. It will add up.
So capacity is earlier also we were expecting only 1 lakh capacity. So 80% cost inflation, how can it happen in 1 year?
No, actually, as far as what we have mentioned is that the cost was last year also it was somewhere around 700 plus what we have estimated. Now the cost has, we are also trying to put in the best in class in all the equipments over there. So keeping that into the mind, including whatever is the other capitalizable cost, it is 900. In the base level, it is around 840 crores.
Okay. I'm still not satisfied with the answer, but moving on. The second question is, so recently there has been an ADD investigation on the met coke, the specific grade which we rely on in terms of imports for fulfilling our requirement. So what is your view on that anti-dumping duty investigation, and how does it impact us?
Suresh, you can add on that?
Yeah. See, for anti-dumping, what the Ferro is using, that is excluded. So we are actually require the low fast, ultra low fast of 0.030. Okay. So whatever the appeal went to the DGTR, this ultra low fast is excluded from the anti-dumping norms.
Okay, so we don't see ourselves being impacted from the ADD even if it is imposed.
Yeah.
Sure, got it. Okay, that's all from me.
Thank you. The next question is from the line of Saket Kapoor from Kapoor and Company. Please go ahead.
Yeah, Dhanyavad sir, and namaskar to the team. Thank you for the opportunity. So firstly, if I could just sum it up, it was the lower realization for ferrochrome per ton to 84,000 that led to this halving of our profit on a Q-on-Q basis, and now the prices trend are again moving above 1 lakh per ton, this is what the sum and substance of what the price action and the real reason for the lowering of profit Q-on-Q basis? If we eliminate the tonnage part.
Yeah. So Saketji, thank you for your good words on the business performance. On the realization part, yes, the net realization is about 87,000 in quarter 4. So there is a reduction in that compared to the previous years. But what 1 lakh rupees per ton, which was mentioned by Venkatesh earlier, was on the prime basis. So 87,000 is our total average cost that we give on net realization basis. So on that we are seeing improvements, but 1 lakh versus 87 is not comparable. It will be much lower than that. So there will be somewhere, if we go by the comparable level, it will be somewhere around 92 to 93,000.
Okay. And so what was the number for the December quarter, the average realization per ton?
Just a minute. I just have to do. So for December quarter, it was 96,943 net realization value. And the quarter 4 last year was 1,01,771.
Okay. No, sir, 96,940 was the average realization per ton for the December quarter. Net realization.
Right.
This has gone down to 87,000 for March quarter.
Yes, yes. And that's why the margins has gone down. But to a major extent, we, through operating efficiency and cost optimization, we have actually able to manage or get a better profitability.
Right, sir. And other than that, sir, we will be spending around 800 crore for this financial year. That is the one FY25-26. This is what the CapEx guidance is.
Yes, for the 3 projects, approximately our spending will be in the range of 800 crores for this financial years, approximately.
Okay, and how much have we spent, sir, for the first 45 days? Have we drawn, or this will be H2? The money will be drawn?
So all the capex we are managing through our own internal accruals. So it has started. Approximately we would have spent approximately 100 odd crores. But a major spend will come in the H2 of this current financial year.
Okay. And what is our closing cash balance as on 31st March?
So you are talking of the total, including
net cash. No, you give me the net cash number after the short-term borrowing.
So if you see, our overall cash position was about 906 crores. This is excluding any security deposit that we have kept. So 906 crores we are having. And our working capital borrowings were 372. So it is about 540 crores approximately. That's the net net cash position we have.
Okay, and these are all invested into the fixed deposit and the short-term instrument. Yeah. I'll join the queue, ma'am. Only what I will ask you. Yeah.
Yes.
Thank you, sir. Thank you. Yeah. I'll join the queue. Thank you and all the best, sir.
Thank you.
Thank you. The next question is from the line of Gio Shah from 7Cs. Please go ahead.
Yeah, first of all, congratulations to all of you for the second renewable energy agreement also of 40 megawatts. First was 70 megawatts and now second is 40 megawatts. 70 plus 40, 110 megawatts renewable energy. Now, first question is about this chrome ore cost, which somebody said it is 7,500 rupees per ton of chrome ore. Now, is it inclusive of royalty and taxes or without royalty and taxes?
The 7,500 is ex-mine, so basically without the royalty.
Without royalty. Okay. Now, after this Kalinganagar project, what is our smelting plan, expansion plan? Because after in 5 years we are looking for ferrochrome production of about 5 lakh tons, right? So what is the next smelter expansion plan?
Yeah, so in phase 1, as we have mentioned earlier, we are adding up approximately 1 lakh metric ton. And once that is commissioned out next year by September 26, we will be also having the phase 2 plan of expansion. So there is already we are working on that. So currently it is phase 1. We are having 1 lakh metric ton, but there is we are open to expansion of the capacity.
Okay. Okay. Now, looking at this renewable energy capacity of 110 megawatts, which we have contested. Now, I understand from our last con call also that our requirement in power is 25% of the renewable in total energy consumption. 25% would be the renewable energy. So we have some 200 megawatts of thermal capacity. So we'll be able to, renewable energy will be able to give us more room to use our captive power, thermal power. Right. So still, when we look at 110 megawatts of renewable energy, it means we can have capacity, total consumption of about 440 megawatts. So it is going on the higher side. Why it is going on the higher side?
So
yes.
Mr. Mahapatra to just respond to that.
Sorry. Actually, we have taken 110 megawatt with 2-3 aspects. One is the current requirement is another 60 megawatt for this Kalinganagar project, phase 1. Phase 2, in this same land, we have a plan for putting up another 33 MVA. So there will be requirement another 30 megawatt. And to say now the CBAM is it, so we'll mix some renewable energy in our existing operational area like Chaudhar and Theruvali. So to say that with the June 26, so we'll get around 25% subsidy in transmission, interstate transmission charges. So that will also give a long-term profit to us. So with keeping all these things in mind, we have taken this.
Okay. Yeah. Okay. Thank you. That's all. Thank you very much.
Thank you, Mr. Shah.
Thank you. The next question is from the line of Aman Mandrecha from Augmenta Research. Please go ahead. Yes, Mr. Aman, go with the question, please. As there is no response from participants, we'll move to the next. The next question is from the line of Anshika from Dean Associate. Please go ahead.
Hi everyone. First of all, congratulations for this amazing result. I wanted to ask what would be the potential Q2 numbers in terms of production, sales, and EBITDA cost?
See, the forward-looking thing, as you know, there are certain restrictions of SEBI guidelines. We won't be able to give you those exact values. But one thing we can say, already Suresh Babu has mentioned that the production will be in the range of around 65,000. And you know that whatever is our production, based on it, we also sell it off. So that would be there. Price realization will depend how the market behaves. But we have said we are seeing some sort of a upside from the low what we saw in quarter 4 that we are seeing. So that's the maximum what we can say as of now.
Okay. Secondly, can I have a little knowledge about what is the current sales mix and how we are seeing it for the next quarter as well in terms of LTC and spot and as well as domestic and export?
Yeah, Suresh, you can
Venkatesh, can you do that?
Yeah. Could you just repeat your question, ma'am?
She's asking about mix.
Sales mix in terms of spot and LTCs and also in terms of domestic and export. In terms of percentage, it will be okay.
Yeah. So when we look at export to domestic, it will be in the similar range like what we have been doing, roughly about 90-10, 90 in export, 10 in domestic. That would be somewhat those numbers, 90 to 95 in exports and like 5 to 10% in domestic. LTC to spot, LTC would constitute about 80% of our sales.
And most of it is in with POSCO or some other customers as well. If any big customers, they are also having LTC apart from POSCO?
Yeah, we are having LTC with many customers apart from POSCO. Yeah, they are big customers. That's all I can say.
Okay.
Yes, ma'am. Does that answer your question?
Yeah, just a last question if I can ask in terms of follow-up, because it is what is currently they are importing Colombian coke, or there is different in the mix of importing the coke from the international market?
Properly. Can you just repeat your question again?
Existing coke import is from still Colombian market, or are we trying to explore some different countries as well?
Yeah, most of the coke is from Colombia only, and some part we are also exporting from other sources.
Is there any ratio to that, or and we mostly use ULP coke or another?
We mostly use ULP coke. The ratios are depend upon the market product requirements.
And as I can recall, the total cash generation for the whole year has been close to 100 crores.
Cash generation in the sense?
Any of in terms of the operational business performance, what was the MFA's total cash generation in terms of what was the outflows for operation and net of the inflows?
So as we said that our PAT is 378 crores, and on the operating and as well as the investing activities we add up, the total free cash flow generated was 430 crores. So that is the overall, this is before payout of the dividend.
Okay. Thank you so much, sir.
Thank you. The next question is from the line of Manan Vandal from Wolford PMS. Please go ahead.
Yes, thank you for the follow-up. So my question was that I couldn't understand what is prime rate, and that could you explain what is that prime rate? What you said about 93,000 something?
Yeah, so the prime rate is basically the gross rate, and then on that, whatever are the sales realizations, those things, on the selling cost and selling expenses, transportation expenses, if you reduce that out, it comes to about 87,000. So we gave you the net sales realization rate, 87,000.
So what is the percentage of these costs usually? So like, could you give an example? Like, let's say 1 lakh is the prime rate, gross rate. Then what would be the rest? How would you do it?
It will be varying from around, it also depends on the ocean freight cost and all. So it varies around 6,000 rupees, between 5,500 to 6,500 rupees.
Okay, so that means the prime rate would be more and then the net rate would be less that way.
Yes.
Okay, 5,000 gap. And so what you said, the long-term contracts of 93,000 which is there, so that is prime, those long-term contracts.
Yeah, that's the average prime cost.
Okay, that is the average prime cost. Okay, understood. And so, for example, let's say, I just wanted an example. So let's say today ferrochrome is 1 lakh as on today's date. So in our realization, how much time will it take for that 1 lakh to come? How many months, for example?
So as I said, it takes about approximately 1.5 months. Lag period is there, 1.5 months to 2 months to get that full value of it.
Okay, understood. Thank you, sir.
Thank you. Next question is from the line of Akhilesh V, an individual investor. Please go ahead.
Thanks for the opportunity. Am I audible?
Yes.
Yeah, you are.
Yeah. I had a few questions. So, production next year can be 3.1 to 3.2 lakh tons of ferrochrome, and in FY28 we can do 3.6 lakh completely?
Yes. You are right.
Okay. And have we entered into discussions for long-term contract of this expanded capacity? So it's already tied up. We can have no problem in placing this quantity in the market.
Venkatesh.
I think you mentioned next year, I think so you were mentioning the production will go up. That's FY26 you are talking of, or what?
No, 27. 27,
Okay.
3.1 to 3.2 and 28, 3.6. Whether those can be met by us.
I will answer. So we like I was mentioning a little while earlier, the domestic market is growing. So there is a huge potential in the domestic market. Added to that, our existing customers, some of them are also expanding. Their expansions are also coming up, and some of them they take a very small quantity from us as compared to their total requirement. So there is a scope there also. So we have the option of expanding with existing customers, but primarily at this stage we are trying to increase our presence in the domestic market.
Is the realization better domestically compared to these long-term contracts, or why are we going to change the mix between long-term and spot in that case?
Yeah, see, like I was again answering that, you can't have a big gap between all these prices. There may be a little lag or a lead, but the prices overall over a period of time would be at similar levels, whether it's a long term or whether when you look at spot. In long term you have that certainty. In spot you don't have the certainty. So I don't see price is going to play a role for us to decide. We would rather look at the requirement, and since the domestic requirement will go up, it would be better for us to cater in the domestic market. And if need be, like I said, we have an option to also increase our exports.
And so second question is on power cost. So this new facility, we have tied up power. Will the effective cost be lesser, higher, or the same as our current power cost?
I think Binay can just add to that.
For Kalinganagar, actually, we have tied up with hybrid renewable energy, and that power cost will be at par with our present generation cost. It won't be that high.
Even after accounting for any subsidies, etc., it's not cheaper, it's at par.
It will be at par. It's not that cheap, because again there will be a transmission charges, MNPN or ED, something like that is there at the landed cost. So it will be at par with our generation cost at present.
And sir, one last question on this figure of 800-900 crores on the capex. So if you could spend some more time commenting on how the figure increased, I think it will assuage a lot of concerns, because the earlier figure was around 600 crores, 500 crores. So if you could spend some more time explaining how it has increased.
So Suresh, you want to add? Then I will just further add on that.
No, you can talk about that.
So what I was just saying earlier, as I said that we are actually putting in the best-in-class plant over there. So we are looking into all the opportunities. So that has increased, because last time initially we had said it will be around 700 crores from there. It is on the base level, it is 840 crores. It has increased, as well as there is a escalation of the various cost which has happened, because this 700 crores we had mentioned somewhere around 2.5 to 3 years back. So that has gradually, with the escalation of cost plus whatever is the quality of the equipments and all what we have done, with that has resulted into increasing to 840 crores. And on that, based on whatever the current accounting standard, we can also capitalize whatever the cost which we will be spending for commissioning and trial run. So that is adding up to about 60 odd crores. So all totally, the full capitalizable value we are taking as 900 crores.
And this is the final value now. There are no escalations on this number.
Right. So this is the final value on this.
And this best-in-class machinery, so will this plant have better efficiency than our erstwhile plant? Will we have more, will the ratios improve in this plant compared to the prior one?
So basically the visibility of the operations will improve. So it is more of the digitization we are doing. So those will happen to a major extent. And efficiency, we expect there should be a better improvement from the current levels. We are hopeful on that.
Okay. Thank you, sir. All the best.
Thank you.
Thank you. The next question is from the line of Joy Shaw from Seven Seas. Please go ahead.
Gentlemen, I understand that for Q4, average realization was 87,000 rupees about per metric ton of ferrochrome. Now for Q1, we are expecting some 92 to 93,000 per metric ton realization, average realization. This confirm my understanding.
So, Mr. Shah, we are seeing some upside, but as you know, there are certain lag period for getting this value in our books. So obviously we are having that our overall we are expecting that Q1 our realization will improve, but exactly quantifying at this stage is slightly difficult, and you know the market still is uncertain, so we can't predict what it will be at the end of 30th June, considering the overall uncertainty in the market. But yes, our overall currently at the current date, we have a feeling that yes, it should be better than what we had experienced in quarter 4.
Okay, thank you.
Thank you, Mr.
Thank you. The next question is from the line of Manan Vandur from Wolford PMS. Please go ahead.
Yes, thank you so much for giving me another opportunity. So we have 110 megawatt renewable energy contract. So would you please give us the details of that? So like per unit, how much price have we contracted it, and for how many years is the contract?
Actually, 110 megawatt, we have signed 70 megawatt of contracted capacity with hybrid mechanism with JSW. Fine. And we have signed binding terms with MP 40 megawatt. Club up together is 110 megawatt.
Correct.
And both the agreement will be for 25 years, and they will be supplying power by June 26.
Okay, and what would be like the agreement price of that? One unit price?
1 unit price of JSW is buzzword tariff at injection point is 384, and with MPIN is 375.
Okay, so that means this is lesser than our current 4.09. So this will be helpful for us. Is that understanding correct?
It's a generation injection point, and your landed cost will be a little bit higher side. But our variable cost is 4.9. It will be at par with that.
Okay, understood.
And these are 25 years contract, PPA contract.
That's right, already 25 years.
Correct. Okay. And sir, our long-term contracts, they are changed. Their contract prices are changed every 3 months or 1 month or something like that. Is there like renewing of prices? Is something like that happening?
For this contract of 110 renewable energy?
No, sorry, sir. Sorry.
No,
about ferrochrome.
Venkatesh, you may add or respond to the question.
Yeah. There are contracts which have a quarterly price, and there are also long-term contracts which is a monthly price based on certain indexes. So both the contracts are there in place.
Okay, quarterly and monthly. So, and how is this determined? So these prices, how would they be determined?
This is linked. If you look at the quarterly contracts, they're linked to what we call it as EBM. That's the European benchmark price, now declared by Samancore. So Because you can't have a long-term contract without any linkage to an index. You just can't have a quantity without a price. It has to be linked. Similarly, we have certain monthly contracts which is linked to certain indexes in China.
So one you said quarterly, you said BBM, and the monthly one is which index?
EBM, European benchmark. E.
Okay, EBM, and the monthly one is linked to what, sir?
It's linked to the Chinese index price.
Okay, understood. And if I wanted to understand like any quarter's price, so how is this linkage actually done? Like, is that a percentage form, or is it directly that same amount? How is that done?
That is a part of the negotiation. Just to give you a small example, the EBM went up by this quarter, that is quarter one. From quarter 4 to quarter 1, there was a change of 5 cents. But if you look at it as, that's the 5 cents is an absolute number. But in terms of percentage, it's 3.7%. So then based on these numbers, we negotiate the price.
Okay, so this was almost a 3.7% rise. So for example, let's say in Q4 our realization was 90,000, for example. And so in Q1 it would be almost 3.74% higher. Is that understanding correct?
It would be, I can't tell, it will be exactly the same.
Correct.
It would be at similar levels.
Correct. Okay, understood. Thank you so much.
Thank you. As that was the last question for the day, I now hand the conference over to Mr. Abhishek Sawant from Veritas Reputation for closing comments. Over to you, sir.
Thank you to everyone who joined us today and participated in the discussion. We appreciate your questions and continued interest in Infra. As always, we remain committed to the transparent communication and delivering long-term value to our shareholders. On behalf of the Board of Directors and Management, we thank you all for your participation in this call. Should you have any further questions, please feel free to reach out to us. We look forward to engaging with you again in our future updates. Have a good afternoon and stay safe. Thank you.
Thank you.
On behalf of Veritas Limited, that concludes this conference. Thank you for joining us, and you may now disconnect your lines. Thank you.